Hi, everybody. This is David Skarica, and this is our stock chart of the day for December 14th. Tomorrow, December 15th, we'll have our Legends of Investment or Legendary Trade Series. It's going to be Jim Dines, rest in peace. Another one of my mentors or heroes or whatever you want to call it, when he became the original internet bug. And Jim should have followed some of his own advice. I'll show you in that video. Because he was right about a lot of things, but he himself just shows you sometimes you got to have these 15, 20 year time horizons. Tough to do that, but it can work. Okay. So yesterday, the Federal Reserve basically kind of, I don't know if you want to call it, they finally did a pivot, but it definitely looked like, this dovishness that we've kind of talked about as well has now kind of begun. In the markets or with the Fed. So anyhow, this is the Dow here. You can see this huge gap up over 500 points. Dow actually broke out to a new all-time high, breaking its 3 years ago high. So actually it's funny because the Dow was lagging for a long time and now becomes the first of the indices to break out to an all-time high. Even the NASDAQ, QQQ. That's NASDAQ 100, but I don't even think the NASDAQ 100 has done that yet. I think the NASDAQ 100 is still a little below its all-time. Oh, no, NASDAQ 100, it's right there at it. But it's just interesting. The Dow did. The S&P is still lagged a bit because there's some sectors and stocks lagging in the S&P, but still it's only 100 points or about 2% below it. So it looks like, there's two comments. Like in the summer, I was looking for a correction, which occurred. But one thing I did note earlier in the summer, if you note in one of my old stock chart of the day, is that I thought that the rally had gone on too long to be a bear market rally. But then I was very cautionary in this area here in the August area saying, hey, you know what? It looks like we could see one of these corrections to the fall. Let's see if it's something larger. And then when that didn't happen, luckily in this kind of area here, I got rid of all my shorts basically. And we moved higher. And I'll talk about in our members version of this update. So a lot of our kind of turnaround plays went up yesterday. They're still earlier stage. Their stocks are going to move on probably later on if we're in a bull market cycle. So if we go look at the Fed, I think we're in a classic Fed rate cut cycle. We're kind of used to maybe, like 2019, 2020, even though that was kind of unique because of COVID. Or, everyone points out to 2007 when they cut rates and the market still crashed, but you're in the midst of this financial crisis. You go most of the time when they cut rates, 95, 98, especially with the market acting the way it is, it's going to mean you're in a bull market. So, don't fight the Fed, don't fight the tape, as Marty Zweig once said. So this is the Fed, the CME, the Fed funds stuff right now. And what this is showing is, as we can see here, this is showing that the Federal Reserve is basically on target to, one second, I'm going to do something here. It's going to make this work better. Give me a second here. Yeah, that's a lot better. Yeah. So, sorry, what happens? I had my projector plugged into my, a lot of times I watch stuff off my projector rather than the TV, and I had it plugged in, but the projector condenses the screen. So anyhow, enough of that boring talk. So yeah, this is the CME right here. And we can see that the chances of a rate hike as soon as March, because remember, we're right here, 525 to 550, are actually over 80% now. January, I think we're basically going to stay where we are in January. May, the second rate hike is actually only 75% chance being priced in. And then a third rate cut, in June has got another about 75% chance. And then over 50% of a fourth one in July. I think it's getting a little too aggressive for my liking. And then 50-50 that, so basically if we go to December, these things aren't the most accurate things, just so you know, they're not perfect. Basically, we got about 150 basis point of rate cuts being priced in by next December. Now, in 1995, the Fed raised rates very aggressively in 94 to about 6-7%, and they cut about 75 basis points. That's kind of what I'm looking at, but whatever way it goes, 75 to 125. Again, we're not in a financial crisis. right now. You just have to, don't fight the tape. Look, the tape is not telling you this, right? That was the difference when they cut in 2001 and 2007 and the market kept going down. It was like the tape was already telling you this. You saw it in real estate in 2007. Tech was always still rolling over big time in 2001. We're not seeing that right now. So I think this is a classic Fed rate cut cycle. Like I said, like 2019, like 1998, like 95, which is going to be bullish. And to me, the setup, I've talked about this in the past, really looks like the 66 to 68 bull market, where you got a very mild bear market to start the secular bear market. And then stocks rallied for a few years. And then there was another bear market. So I would see stocks kind of maybe topping sometime, maybe as the earliest would be it's always impossible to predict this kind of thing. You have to go with the flow, but maybe late 2024 into 2025. And then the midterm year, and we saw that this past year with 2022 being the lows. Midterm years are usually when the lows are 74, 82, 87. It came a year late. 1990, 94, 98, 2002, 2008. It did happen in the election year. 2012, there was a small correction. 2016, actually the low actually happened in late 2015. Sorry, 2016. Sorry, I'm 2010. Yeah, there was a big correction in 2010. 2014, there was a mild correction, which represented a good low. 2018, the bear market, which was the low in 2022. So midterms are usually when the lows occur. So I would kind of see a top setup in 2025 and maybe a decline in 2026. And what's great for us is I've talked about in the past, like I have these beaten up turnaround plays for the paying members, and a lot of them were up a lot. So I think as we get into this loosening cycle, things like the turnaround plays, utility stocks, dividend players, gold and precious metal stocks, these are going to be the leaders. Like gold popped right back up yesterday. We can see gold. We'll get a shorter term chart here so we can really see it. Gold, boom, was up. It's up. This is today. So it's up nearly $20 today after being up huge yesterday. We're actually almost back. If you include this reversal here, we're actually almost at the closing high for gold in 2013. And the GDX, they're now popping back up. You can see GDX is almost back to its highs here. So I'm feeling quite good now. Now, a lot of the juniors got wrecked during this, few day correction, but they'll probably continue to see tax loss. And again, the juniors kind of lag. I would think that if we're in this move for gold that lasts, again, as the Fed cuts rates into the end of 2024, probably the juniors wake up at the end of the first quarter or sometime in the second quarter. Because really, I think gold breaks finally that 2100 and goes to the 22, 23, 2400. That's positive. And I saw a lot of negative sentiment pop into the market here. So what I just wanted to show you is, and if we go look at TNX, you can see, rates are now under 4% on the 10-year bond. So it looks to me like that Fed decision means the market's pricing in more aggressive Fed cuts, because that's good for gold miners. That's good for turnaround tech plays. I'll throw one in here because I know I've talked about it in the past. And Fubo really looks like it's about to break out. This has kind of been one of my larger holdings. I'm in just under $2 a share, and you can kind of see this resistance here around $3.50 and then $5. So if Fubo breaks that, I think it's off to the races. And they have to show that they can become profitable probably by early 2025. But they've cut their losses a bit. They're still growing, etc. But anyhow, this is the kind of, like Fubo went from 60 to 1. Even if it just, so let's just say that's roughly a 60-point decline. Let's just say 50-point decline, right? So this stock goes down 50 points. To take back 10 of that 50-point gain, which is, 20% of the loss, or 20 of that 50-point loss, Fubo just has to go to 10, which would be a great gain from here. So these are the kind of stocks I've recommended. And of course, we have gold miners as well. I've got a little tech play that's got a technology using zinc for batteries. So these I think these plays are going to outperform, and utilities, because again, all of a sudden, if we go look at something like Philip Morris, right? It's kind of done nothing, but this yields over 7%, or sorry, over 9%. This will look more attractive as rates go down, right? Like look what happened here in 2020 to 2021 when rates went to zero. This had a huge run because, the yield was really appealing in Altria. used to be Philip Morris, sorry, because rates went down. So again, looks to me like the Fed, and I've been predicting for a while. Remember, in 2021, I was more aggressively hawkish than most people. I was saying rates aren't just going to 2-3%; they're going to go much higher with inflation where it is. And I've been now, basically since the middle of this year, I've been saying it looks like the rate hikes are basically finished. And like I said, you don't fight the tape, you don't fight the Fed, and the way the market action is right now is telling me that this is a typical rate cut cycle. 95, 98, 2019, 2020, where the Fed cuts rates and the market rallies. It's not a I don't think anyhow, it's a 2001 or 2008 cycle, 2007 cycle where they cut rates and the market continues to go lower, because we don't see the signs of a bubble imploding or whatnot. Like, for example, housing stocks, which were rolling over, in there, are now breaking out. I was short this stock for a bit. Luckily, I got out right about here in the mid 40s, after this decline happened here. And, but now this is breaking out to basically new highs. So, yeah, there you go. Anyhow, everybody take care. I hope you enjoyed this video. For paying members, we will have a more in-depth video.